All right, buyers. All right, sellers. This is the strategy for 2024. Spring of 2024. This is a strategy that benefits both the buyer, both the seller. I think this is going to become more and more popular. I'm already seeing justification for using this. Stay tuned as I explain the program that if you don't know about it, you should. If you do know about it, you should be presenting it as an option to both the sellers and the buyers. Stay tuned. All right, I'll jump right into it. I don't want to waste too much time. I love sharing mortgage knowledge from the field. This is a strategy I'm implementing with my buyers. I'm helping agents present this to their sellers so that sellers can also use this strategy to help with the problem that we all know we're facing in this current real estate environment, affordability. Monthly payment is the most important thing to the buyer. It seems like the builders have figured this out. And so the builders go out there and they start with an incentive. Here's an incentive to help you with your number one pain point, price per month on your mortgage, right? And so I'm going to explain the 2-1 buy down. It might not be something new to you. Oh, I've heard about temporary buy downs. This is nothing new. I'm telling you, this is going to be a product that's going to be used more and more. As more and more people realize on the sell side, hey, I can offer a $15,000 credit. That's really going to help this buyer. It's going to help me sell this home quicker. You might not have needed that in the past. With interest rates higher, with buyers more and more choosing to sit on the sidelines and sit on the fence, if you want your home sold and sold quickly, this is something you might want to consider using. And buyers, this is something you definitely want to ask for. I'm going to show you how it works, why in this current environment, after everything the Fed has said, rates are going to be higher for longer, right? And so don't expect for interest rates to come down anytime soon. I'm going to show you the Excel spreadsheet. I'm going to jump into it. Before I do, if you like straightforward content like this, consider subscribing, share this with a friend, leave me a comment down below. Matt, I'm in South Carolina. This is not very common where I'm at, but thanks for the information. I'm going to share it with my agent. Matt, I'm in Florida. I used a 2-1 buy down when I closed in November of 23. I'm glad I did because rates don't seem to be going down. Whatever the case may be, I love the interaction. So share the video, like, comment, subscribe, all the things. All right, now let's jump into it. I think that examples are the best way to showcase things. So I'm going to give you a real life example. A real life example, so real that I got it today. An agent reached out to me and said, I've got a buyer who's got a beautiful home. It's listed right, but we want to sell it quick. They're willing to give a $15,000 seller credit. How can we promote this in a way that lets buyers know that this seller incentive can really help them? This is the 2-1 buy down on a $669,000 purchase. We don't even need the full $15,000 the seller's giving. We're using about $12,600 for this buy down. And then we've got another $2,400 that's going to help offset closing costs. But when I show you what this first year payment equates to, it's going to knock your socks off. Literally the same as if you saved $104,000 off the list price. That can't be true, Matt. That sounds too good to be true. Let me show you. 7.124, today's current rates. For this buyer, it's about a point cost, I think, or maybe it's 0.8, whatever this is down here. But that's not the important part. The important part is 4408 might give some people some sticker shock. And so you want to be able to ease into it. And of course, they got to qualify for the 4408 payment. But if you tell them this credit is going to allow you to have a payment, if you close in May of 2024, your first payment's due July 1st, 2024. And that first payment, principal, interest, tax, insurance, all in is $37.17 a month. That feels a little bit better. I'll tell you what it equates to, like I talked about. If you bought this house for $565,000, $100,000 off list price at today's rate, your all-in payment's $37.23. Same all-in payment. $100,000 off. The seller's giving you $15,000 to have a payment that equates to that. And that's July of 2024 through June of 25. Then July of 25 through June of 26. you've got a payment that correlates to the 6.124 interest rate, and it's $4,055 a month. This buy down is effective and important in today's environment because the Fed has said it, and they've said it loud and clear. Rates will be higher for longer. I just looked at the probabilities for interest rates. 2 interest rate cuts between now and the end of the year is the most likely scenario. The chance that we get a rate cut next week, May of 2024, is only 4%. The chance that we get one by June or July of this year, June, then we're talking about 16% chance. July, getting one cut's up to like a 40% chance, but rates aren't coming down fast and they're not coming down a lot. With this, what you're going to do is you're going to lock in, at least for the first couple of years, a payment that's more affordable. Can I guarantee it? You're going to be able to refinance into a 5.5 after 18 months? No, but it's relatively likely that sometime in the next 2, 3, 4 years, there's going to be interest rates available where you can refinance this. And if you don't, it just acts like a 30-year fixed rate mortgage in years 3 through 30. Hopefully that was helpful. If you have any questions at all, these things are relatively simple to structure for anybody who's done any number of them. I've done a lot of them. They're available a 1.0 buy down, meaning 1% lower in year 1, and then years 2 through 30 goes back to the original rate. 1.1 buy down, meaning 1% lower in years 1 and 1% lower in year 2. Then years 3 through 30, it goes back to standard rate. The 2.1, like I just showed you, 3.2.1, if there's a lot of credit available, there's a lot of different ways to do this. And depending on loan size, depending on interest rate, depending on number of factors, the amount you're going to need from the seller to do the buy down is going to differ, but this should be part of negotiations. This should be something that sellers should be discussing, way to move their listings and help buyers. This should be something that buyers agents should be working closely with the buyer's lender to say, hey, we can afford something at the 550 mark. We'd really like to get in there with a 1.0 buy down. So, 1.0 buy downs, in a lot of cases, are only $3,000 or $4,000, not like a huge ask of the seller to say, we'd like to offer you 544 with a $4,000 seller credit. Not a big deal, right? So buy downs, promise you, going to be all the rage if they're not already all the rage in whatever market you're in. Leave your comments down below. Maybe you think I'm an idiot. Maybe you think I'm a genius. Maybe you think I'm somewhere in between. Either way, thanks for watching to the end. I sincerely appreciate you. Let me know if me and my team can help in any way. You know how to do that. All you do is go to greatmortgagebroker.com, fill out the quick form. We're in 48 states, right? So greatmortgagebroker.com. We'll talk to you soon. Until next time. What I used to say, we gonna see. Yeah. Until next time, we gonna see.